Briefing: ARK Invest portfolio rebalancing. Cathie Wood bets heavily on Tempus AI. On March 27, 2026, ARK Invest, led by Cathie Wood, completed a significant portfolio adjustment, signaling a strategic shift from traditional tech giants toward vertical AI applications. Latest trading data reveals that Wood is aggressively trimming positions in mature tech stocks such as Meta platforms, Nvidia, and Roku. Simultaneously, ARK Invest has concentrated capital into Tempus AI, which is currently trading near its one-year low. As one of the few targets to receive consistent buying from Wood recently, Tempus AI focuses on leveraging artificial intelligence to optimize healthcare data and precision medicine, becoming a new core pillar in ARK's portfolio to replace traditional big tech. This rebalancing reflects Wood's latest investment logic. While the market sells off traditional big tech and streaming platforms, ARK prefers to position itself in high-growth vertical AI sectors at low valuations, seeking to seize the first-mover advantage in the AI-driven healthcare revolution. Briefing: the vision and choices of AGI pioneer Demis Hassabis. As of March 27, 2026, Demis Hassabis, CEO of Google DeepMind and a foundational figure in global AI, continues to draw intense scrutiny regarding his strategic thinking and ethical stance. Hassabis is regarded as the mastermind behind the Infinity Machine. He views DeepMind as a scientific ladder toward artificial general intelligence, AGI. A pivotal turning point in his career stemmed from a profound conversation with Google co-founder Larry Page. It was Page's question, how to use Google's massive computing power to accelerate scientific discovery, that ultimately convinced Hassabis to sell DeepMind to Google, ushering in a new era of AI-driven scientific innovation. However, on the road to AGI, Hassabis holds significant differences with peers like Elon Musk regarding safety and ethics. At the heart of their long-standing debate is the 2 AM problem, whether humans possess sufficient control mechanisms to ensure a superintelligence goals align with human values. Despite external concerns over the militarization of AI, Hassabis stated in internal communications that he is very comfortable with Google's involvement in defense projects, believing that supporting national security within a compliance framework does not conflict with technical progress. From algorithmic breakthroughs in the lab to complex international geopolitical and ethical maneuvering, Hassabis is leading DeepMind in a search for balance between pushing technical limits and upholding social responsibility. His decisions not only dictate Google's technological trajectory but are profoundly reshaping the symbiotic relationship between human civilization and AI. Nvidia AI Industry Dynamics Briefing, March 27, 2026. Nvidia is currently further consolidating its status as the kingmaker of the AI era through a diversified strategic layout. At the infrastructure level, Nvidia has entered a deep partnership with Microsoft to advance the AI plus nuclear power initiative. This aims to meet the surging electricity demands of large model data centers through stable clean energy, ensuring the energy sustainability of AI evolution. Regarding the technical ecosystem, Nvidia emphasizes a future vision of balancing open and proprietary. The company recently donated the GPU Dynamic Resource Allocation (DRA) driver to the Kubernetes community, actively promoting open source AI by strengthening the compute scheduling capabilities of open infrastructure. However, its proprietary technology faces challenges in the consumer market. The newly released DLSS5 technology has sparked controversy for its over-reliance on AI-generated frames, with some developers and players expressing dissatisfaction over latency and visual authenticity. Nevertheless, Jensen Huang's industry influence at recent public events reaffirms Nvidia's central role in the global tech landscape. From energy positioning to open-source contributions, Nvidia is attempting to find a balance between technical controversy and ecosystem building, continuing to define the underlying architecture of the AI era. Briefing: Meta, Facebook, shifts strategic focus to AI-driven e-commerce and optimization. On March 27, 2026, Meta, formerly Facebook, underwent major adjustments in its organizational structure and product features. Organizationally, Meta announced layoffs affecting hundreds of employees across several departments, including Reality Labs and Facebook. This indicates the company is further optimizing human resources to focus on core businesses amid market shifts. In terms of product features and AI applications, Meta is going all in on an AI-driven e-commerce ecosystem. By introducing new AI technologies, Instagram and Facebook have significantly improved shopping convenience and reintroduced commission mechanisms for influencers, aiming to drive commercial conversion through creator incentives. Notably, Facebook launched a breakthrough AI feature, a new button that allows the system's AI to pre-identify and analyze photos users have not yet uploaded, deepening AI's intervention in user content management. Additionally, the competitive landscape has shifted as OpenAI announced the termination of its video generation model, Sora. While no specific reason was given, this move leaves more market space for Meta's continued deep cultivation in multimodal AI. In summary, Meta is consolidating its leadership in social e-commerce and AI by streamlining its organization and strengthening commercial AI applications. Google AI Technical Breakthrough and Industry Transformation Briefing, March 27, 2026. Google has recently made significant progress in core AI technologies and applications, triggering a comprehensive transformation ranging from the hardware supply chain to the content ecosystem. At the foundational level, the Google research team's new algorithm, TurboQuant, has become the industry focus. Utilizing extreme compression techniques, the algorithm increases AI memory processing speeds by 8x while reducing operating costs by over 50%. This breakthrough not only redefines AI operational efficiency but has also sent shockwaves through the global semiconductor market. As TurboQuant significantly reduces reliance on high-performance memory, storage giants like Samsung and Micron are facing notable stock price pressure. On the application side, AI is reshaping the rules of internet traffic in professional roles. The traditional logic of Google search and SEO is being deeply rewritten by AI, forcing content creators and businesses to rethink information distribution. Meanwhile, AI penetration into professional roles is intensifying. Feedback from internal Google editors suggests that while AI has taken over some foundational tasks, versatile talent with humanities backgrounds remains irreplaceable when handling complex logic and emotional resonance. Overall, Google has achieved a leap from cost reduction to efficiency gains with TurboQuant. This not only heralds a lower threshold for AI democratization but also marks AI's evolution from a mere technical tool into a core driver restructuring the hardware market and human professional value. Meta AI Strategy Briefing, Comprehensive Reshaping from Infrastructure to Application. As of March 27, 2026, Meta is undergoing a deep AI transformation personally overseen by CEO Mark Zuckerberg. The strategic focus has shifted entirely toward the integration of compute infrastructure, self-developed chips, and ecosystem applications. In terms of underlying architecture, Meta has significantly increased hardware investment. The company announced it would sextuple its investment in its West Texas AI data center to $10 billion, aiming to build a compute cluster capable of supporting next-generation large models. Simultaneously, Meta entered a strategic partnership with ARM to develop new data center silicon. This move signals Meta's intent to move away from third-party chip suppliers, optimizing AI compute efficiency and reducing long-term costs through customized hardware. At the application level, Meta is using AI to reshape its core commercial ecosystem. By introducing smarter AI shopping assistants and recommendation systems in Instagram and Facebook, Meta aims to enhance user shopping experiences and add conversion rates, directly translating AI into commercial monetization. However, aggressive expansion has brought safety challenges. A recent rogue AI agent incident that triggered an emergency state exposed the governance risks Meta faces in pursuit of frontier breakthroughs. Nevertheless, from management's strategic pivots to massive infrastructure spending, Meta has clearly identified AI as its core growth engine for the next decade, attempting to establish leadership through a software-hardware integration strategy. Meta Dynamics Briefing, Strategic Shift Amidst Multiple Challenges. On March 27, 2026, Meta stands at a critical crossroads of strategic transformation. In hardware R&D, the Reality Labs division is facing layoff pressure for the 2026 fiscal year, marking a shift toward more efficient and productive investments in the VR/AR space. Despite this, capital markets remain optimistic about Meta's long-term prospects. Erste Group recently upgraded its rating to buy, emphasizing that Meta's continued investment in AI will be the core engine driving future growth. However, Meta is also mired in legal and competitive quagmires. Internally, the company faces lawsuits regarding its 2025 layoffs, with allegations of age discrimination during the restructuring. Externally, the Arkansas Attorney General's lawsuit against Meta and other social platforms is progressing, following a previous $6 million judgment, as regulatory pressure continues to mount. Furthermore, competition in the AR hardware market is intensifying. While Ray-Ban Meta smart glasses once dominated the conversation, competitors like XR are aggressively capturing market share in virtual screens and AR/XR through significant price cuts and technical iterations, such as the XR-1S. For Meta, the core challenge for the remainder of 2026 will be balancing high R&D costs and legal compliance risks while leveraging its AI advantages to maintain leadership in the smart wearables market. Briefing: Meta Smart Glasses Market Dynamics and Social Controversy Overview. Release date: March 27, 2026. As the popularity of the Meta X Ray-Ban smart glasses series continues to climb globally, the product sits at the intersection of technological expansion and socio-ethical controversy. Regarding product iteration, Meta is preparing to launch 2 new models of Ray-Ban AI smart glasses. The next generation is expected to further strengthen AI integration, improving response speeds for voice interaction and visual recognition. Meanwhile, demand for existing products remains strong, with refurbished models appearing at retail discounts, e.g., $60 off, signaling that the product line has entered a mature commercial cycle and is spreading from tech enthusiasts to the mass consumer market. However, the democratization of this technology has triggered severe social and regulatory challenges. On one hand, the Ray-Ban Meta creep phenomenon has sparked widespread public concern over privacy violations. Media reports suggest the device's discrete filming capabilities are altering social etiquette and the sense of security in public spaces. On the other hand, regulatory pressure is escalating. U.S. Senator Markey recently pressured Meta regarding potential facial recognition risks in smart glasses, demanding the company clarify technical boundaries to prevent the device from becoming an omnipresent surveillance tool. Summary *. Meta smart glasses are accelerating their commercial expansion through new product R&D and price tiering. However, the risks of privacy infringement and facial recognition regulation will be the key variables determining the long-term compliant development of this category. Briefing: Mark Zuckerberg's strategic shift toward AI and political business synergy. On March 27, 2026, Meta CEO Mark Zuckerberg is comprehensively reshaping his personal leadership and the company's footprint through deep AI integration and strengthened political business ties. In terms of management efficiency, Zuckerberg is developing a personal AI assistant to aid his duties as CEO. This project aims to use AI for decision analysis and daily management, marking a new stage of intelligent internal governance at Meta. Simultaneously, for the core business, Zuckerberg officially launched the Meta Small Business Initiative, using technical tools to further penetrate long-tail markets and strengthen the platform ecosystem. Regarding strategic investment, the market has re-evaluated Meta's spending over the past few years. Latest analyses suggest that Zuckerberg did not burn $800 billion on the metaverse as rumored. Rather, the R&D investment laid a solid compute and technical foundation for the current AI race, enabling a smooth strategic transition from VR to AGI. In the realm of political business interaction, Zuckerberg's influence is extending from Silicon Valley to Washington. He has been invited by the Trump administration to join the White House AI Advisory Council and the President's Council of Advisors on Science and Technology, alongside tech giants like Nvidia CEO Jensen Huang and Oracle founder Larry Ellison. This appointment highlights Meta's central role in national AI strategy and suggests that tech titans will play a more dominant role in policymaking and national technological competition. Briefing: xAI's Grok platform mired in legal disputes over deepfake pornography. On March 27, 2026, Elon Musk's AI company, xAI, and its social platform, X, are facing severe legal challenges globally. The core controversy involves allegations that its AI assistant, Grok, lacks effective oversight in generating non-consensual explicit, deepfake pornographic images. In the United States, the city of Baltimore has officially filed a lawsuit, alleging that the Grok platform played a key role in generating non-consensual sexualized deepfakes. The lawsuit states that the abuse of this technology poses a serious threat to public safety and personal privacy. Simultaneously, a Dutch court issued an adverse ruling against Grok for generating undressing images, viewed as a rare and harsh legal sanction against AI-generated harmful content by the international judiciary. While AI technology shows positive potential in fields like healthcare, such as the lung impact clinical trial reported in Nature, which uses AI to optimize chest X-ray screening for lung cancer, xAI is currently at the center of a public storm. This series of lawsuits highlights loopholes in generative AI content safety governance and signals that global regulators are intensifying efforts to hold AI platforms legally accountable. Currently, XAI has not issued a final response to the various lawsuits. The progress of these cases will have a profound impact on compliance standards for the AI industry. Briefing Elon Musk's AI industrial layout and compliance updates, March 27, 2026. Today, Elon Musk's AI empire saw several major developments in infrastructure and legal compliance. On the hardware supply side, Musk officially announced the construction of an advanced AI chip manufacturing plant in Austin, Texas. Jointly built by Tesla and SpaceX, the facility aims to reduce reliance on external chip suppliers through vertical integration, providing core compute support for autonomous driving and aerospace technologies. Meanwhile, with the official launch of the Terafab project, Musk's vision of a large-scale automated manufacturing system has entered the operational phase, further consolidating his leadership in AI hardware infrastructure. In terms of expanding compute space, SpaceX disclosed detailed plans for its orbital data center satellites. The project aims to deploy processing nodes in space using the Starlink network, achieving high-speed, low-latency data processing with global coverage via low Earth orbit, LEO, opening a new physical dimension for AI computation. However, on the application side, Musk's AI model, Grok, is facing serious legal challenges. A Dutch court recently issued an injunction requiring Grok to stop generating unauthorized AI nude images. As European regulators ramp up pressure on generative AI content compliance, this ruling not only demands higher standards for Grok's algorithmic governance but also suggests that Musk's AI business must navigate an increasingly strict global legal environment while pursuing aggressive technology. Briefing, Sam Altman's power restructuring and OpenAI's strategic pivot. As of March 27, 2026, OpenAI CEO Sam Altman is at a critical turning point in corporate governance and technical evolution. Recent developments show Altman is preparing for the release of a new AI model, codenamed Spud, through a series of management reassignments and the divestment of external interests. In terms of governance, to avoid potential conflicts of interest and deepen industrial cooperation, Altman has officially stepped down from the board of the nuclear fusion startup Helion Energy. This move comes as OpenAI actively seeks strategic partnerships with energy giants to solve the power bottlenecks caused by surging AI compute demands. Meanwhile, public opinion of Altman is polarized. He is seen by some as a realist confronting the truth about AI energy consumption, admitting that technical progress requires massive resource investment. Others describe him as a deep strategist navigating between aggressive technical pushes, the let-it-rip mode, and complex corporate PR. Internally, Altman is delegating some daily management authority to focus on the development of the cutting-edge model Spud. The model carries high expectations to break through the performance bottlenecks of existing large models. However, frequent personnel changes at OpenAI and the company's drift from its non-profit origins continue to spark external questions regarding its corporate culture and long-term goals. Key points *** management focus shift * Altman adjusts duties to go all-in on the Spud model R&D. * conflict of interest avoidance * resigns from Helion Energy Board to pave the way for OpenAI energy partnerships. Public focus * facing labels of aggressive and secretive, Altman maintains a resource-intensive AI development path. Organizational challenges * while pursuing technical leaps, OpenAI must address controversies over governance transparency and mission alignment. Briefing, Ilya Sutskever and the reshaping of the AI power map. As of March 27, 2026, the tech world is at a critical juncture where technical breakthroughs and governance struggles intersect, centered around former OpenAI chief scientist Ilya Sutskever and the industry tremors he triggered. As the soul behind the groundbreaking technology of ChatGPT, Sutskever's vision not only drove the generative AI explosion but also sparked deep discussions on apocalyptimism. Currently, Sutskever is at the center of a multi-party tug-of-war. In his legal and public battle with Sam Altman, Elon Musk has repeatedly emphasized Sutskever's past anxieties regarding AI safety and the company's shift toward profit, using them to argue that OpenAI has strayed from its original nonprofit mission. This fear of technology spinning out of control, coupled with the aspiration for AGI, has become a core theme in contemporary AI documentaries, reflecting society's struggle between fear and necessity. Simultaneously, capital markets are restructuring in response to this shift. Traditional venture capital firms, represented by Kleiner Perkins, have reinvented themselves by successfully raising $3.5 billion for new funds aimed at capturing the next AI paradigm shift led by top scientists like Sutskever. These dynamics indicate that Sutskever's influence transcends code. He has become a key symbol defining the power structures, ethical boundaries, and capital flows of the AI era. OpenAI Dynamics Briefing, March 27, 2026. OpenAI is currently in a period of aggressive expansion coupled with setbacks in core business areas. In terms of market competition, facing pressure from Anthropic in the enterprise sector, OpenAI is actively lobbying private equity investors to consolidate its capital moat by optimizing financing terms. Meanwhile, the company plans to double its workforce this year, signaling its ambition to maintain global leadership in AI. However, this rapid expansion is accompanied by severe strategic pain. Recently, OpenAI announced the shutdown of its high-profile video generation app, Sora. This move led directly to partner Disney announcing its withdrawal from related cooperation agreements, dealing a heavy blow to the company's multimedia strategy. Public reaction has been lukewarm. Media outlets like The Atlantic have criticized OpenAI for biting off more than it can chew, alleging that in its blind pursuit of all-encompassing business coverage, product quality and execution are significantly declining. Overall, OpenAI is attempting to reverse its decline through large-scale talent acquisition and capital maneuvers. However, under the pressure of shrinking core product lines and the loss of partners, balancing scale expansion with product depth has become its primary challenge. DeepMind Development Briefing, March 27, 2026. Today, DeepMind is again the focus of the tech world, demonstrating strong momentum in strategic expansion, technical application, and industry standard setting. Strategic Review and Defense Stance. The Wall Street Journal provided an in-depth review of Google's acquisition of DeepMind, hailed as the most successful in history, emphasizing how the decision established Google's leadership in the AI era. Meanwhile, facing growing defense needs, DeepMind CEO Demis Hassabis stated in internal communications that he is very comfortable with Google's progress in defense projects, signaling a shift in the lab's stance on balancing scientific ideals with national strategic applications. Robotics and infrastructure innovation. In terms of technical implementation, DeepMind announced a deep partnership with Agile Robots. This collaboration not only marks DeepMind's continued push into embodied intelligence but also suggests that AI-driven robotics will reshape data center requirements. The partnership aims to address growing compute and infrastructure pressures through more efficient automation solutions. AGI standard setting. To further drive frontier research, DeepMind, in collaboration with Kaggle, launched an AGI benchmarking competition with a $200,000 prize pool. This move aims to break existing evaluation bottlenecks and define measurement standards for artificial general intelligence through community collaboration. Summary. From a retrospective on its historic acquisition to cutting-edge robotics collaboration, DeepMind is consolidating its position as a global AI core engine by deepening defense involvement, restructuring infrastructure needs, and leading AGI evaluation standards.